Welcome back to my daily report market analysis videos with me, Richard Perry, market analyst at Hantech on Monday, the 11th of November. Going to look at cable now. And sterling has just been drifting really. I've spoken about euro dollar, where euro dollar has fallen away quite strongly. Cable is less strong I think in its decline, but obviously there is still this drift lower. And in recent weeks, I've been saying that I think that this rally that we're seeing in cable is going to start to drift. With a negative bias, and that seems to be what we are seeing. We saw that rally a couple of weeks ago, where the market failed at that 29.75 mark and then fell over and started to drift back lower throughout last week. I think that is going to be a sort of indicative of what we see actually in cable. I think it's likely that in the coming weeks that we see cable drifting into the 26 to 27 area. And that's given the fact that you've got this political uncertainty with regards to the UK general election. Dollar has been taking more of a strengthening angle as well, so subsequently that is also a drag on cable. But technically speaking, it's not all that bad at the moment. Certainly, given the fact that I mean, the decisive breakout was obviously 25.80 this old July and subsequently September high, broken out also around the 50% fib level of the rally. So I think that that is probably going to be the limit of any downside for now. But I think that a drift back towards that could well be seen. That helps to unwind some of this overbought momentum as well. You've got the MACD lines which are correctively slipping, stochastics also, and RSI back into the sort of 50s, but nothing too sort of decisive about any selling pressure, just more of a drift really. You've got the hourly chart which is configured below 60 on the RSI now, consistently moving back to 30 as well, so again that suggests a negative bias. Nothing too significant about the selling pressure, because normally when you get the real momentum through the hourly chart, you'd see on a real bear phase, you'd see the RSI below 30 consistently, but that's not really being seen. It's just hitting 30 and then bouncing, so it's a relatively mild corrective pressure, but still nonetheless there is a negative bias. You can see the initial support 27.67 from Friday's low, but the rebound likely to falter around the 28.25 mark, 28.25, 28.30. As you can see from Thursday, Friday, resistance levels as a pivot around 28.30 area as well. So with that regard, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinar.